So just for 20, 30 minutes, and then I leave you guys. I just want to show you how to build a cash budget. How to build a cash budget. And this is the question that I'm using, which I'll be able to share with you. This is the question you're using. Yeah. So they've given us here months. You can see November 01, December 01, January 02. We have February 02, March 02. We can see the sales figures that we made, right? We can see the sales figures that we made. We can see our purchases. We can see our wages. We can see our wages there. Then we're able to see our overheads. Then they're giving us the payment collection terms. We are told that sales is 40%, or rather sales, 40% are cash sales received in the month of sale. 60% are credit received 2 months after the month of sale. Then we have purchases paid in the month following the month of purchase. Then we have wages, 75% paid in the current month, 25% paid in the following month. So overheads paid in the month after they are incurred, paid in the month after they are incurred. Then we have opening cash balance as at January 20x2. For this very exercise, the cash balance was what year? 15,000. So the overheads there, they are paid in the month after they are incurred. Yeah, great. So then they want us, ladies and gentlemen, to give them what year? A cash budget. So cash budget is really easy. You simply need to follow the rules. So we have, they want us to do a cash budget. Actually, it's supposed to be a cash budget for January, February, and March, the first quarter. They only want cash budget for the first quarter. Yeah. So cash budget, what do? We look at our receipts vis-a-vis payments. Receipts vis-a-vis payments. So we have here receipts, yeah. So then how do we receive? From which sources do we receive this money? From our sales. So in this case here, we have here sales. So in terms of sales, we have, ladies and gentlemen, the cash sales, and then we have credit sales. So cash sales and the credit sales. Cash sales and the credit sales. So what is the policy? Remember, the rule is, they have told us, although it's not very expressly, I'll be able to write it there. They want us to do a cash budget for only 3 months. January, February, March, like that. All right? Yeah. And they're giving us information about how the sales are spread. They're giving us information about how these sales are spread. So these sales, what they're telling us here, ladies and gentlemen, is that out of our sales, ladies and gentlemen, we are told here something very nice here. Out of whatever we sell, yeah, 40% are cash sales, meaning that they're received in the month of what year? In the month of sale. And then 60% are credit sales, received 2 months after the month of sale. So this example is very good. You can see they have given us, on top of this January, February, March, they've given us 2 previous months. So we have in this case here, for example, November sales, which were 80,000. Let's first of all analyze that 80,000 in the month of November. 80,000 in the month of November. 80,000 in the month of November. So remember, we have here November, December, and then we have our months, January, February, we have here March, like that. So they're telling us that November sales was 80,000. So out of this 80,000, we know that 40% is cash. 40% is cash. Cash means that it is paid promptly on the very month. So can somebody in this case say, give me what is 40% of 80,000? 40% of 80,000, does somebody give me an answer? 40% of 80,000, somebody give me an answer. 40% of 80,000. Somebody give me an answer. 40% of 80,000, they're giving me 32,000. So then this 32,000 will be received in the month of November. Then we have 60%, which is on credit. So this 60% we are told will be received 2 months, 2 months after, 2 months after, 2 months after, 2 months after. Can somebody give me 60%? You simply go back to that calculator of yours. Remember, you already have 80,000 times 0.4. So you say back, there is a place where you can use those replay keys. You go back, and then you delete 0.4. Instead of saying 0.4, now you delete 0.4 and put there 0.6. Because you want 80,000 times 0.6. Can somebody give me that figure? Yeah, 48,000, isn't it? So can somebody then tell me, this credit sale we have made in the month of November, when do we expect to receive it? Remember, the rule is that we shall receive this after 2 months. After 2 months, which month do you expect to receive the 48,000? Please talk to me. In January, because this is how we count. So we have month number 1, month number 2. So on the credit sales January, we have a figure of 48,000 that you're receiving in the month of January, but we are done the sale in November. We're done the sale in November. Yeah, I hope that is okay. Don't book the 40% which was cash that was paid in the month of November. So is that clear, somebody? Is that clear, somebody? Is that clear, somebody? Please, you should get used to typing. Yeah, you should get used to typing Y for yes or no. Great. Then we go to the second month. The second month, you can see, ladies and gentlemen, is December. So December, are you able to see the sales of December? Remember, sales at times you can sell and you don't receive the money immediately. Even you guys, in terms of fees, we allow you to pay in installments. So you can see December last year, we sold goods worth 100,000. The total sale was 100,000 in December. But we never received all this money in December. We know that 40% for sure was cash. So 40% of it's cash, it means that I'm receiving this money in December, which is 40,000. And then 60% is credit. 60% is 60. 60% of 100,000 is 60. Yeah, and that 60,000, then I will receive it 2 months as per the law. As per the rule, I mean, of the question, 2 months will be 1 to February. Fortunately, once I've started this placement of this figure here, all the others now will simply fall in place. So then here we shall have 60,000 like that. Go to January and do that sales analysis. So January, ladies and gentlemen, in the month of January, we can see that the sales in the month of January, we can see that the sales was 110,000. In the month of January, we can see the sales was 110,000. Yeah, 40% was received in the month of January. 40% is cash sale. 40% is cash sale. So can somebody give me this 40%, which is cash sale? 40% is cash sale that I'm going to receive in the month that is required in my budgetary month. So 40% is cash, which is how much here, somebody? Is it 44,000? So this one, I'm coming to receive it here, 44,000 in the month of January. In the month of January. And then out of these 110,000, 40% have received in the month of January, 60% will come 2 months after. 2 months after is 1, 2 in form of credit. So can somebody give me 60% of 110,000? Please talk to me. Please talk to me. Yeah. In this case here, we have here 0.6 of 110,000. Please talk to me. Remember, that one is coming on credit here. Yeah, it was a sale made in January, but in this case here, we are coming to receive this amount now in March like that. In March like that. Then you continue like that. Like right now in my workings, remember you're doing these in workings up there, don't bring these here. In my workings up there, I can see February. I can see February. I can see February. So February, what do I have here in February? February, the total sale was 130,000. In February, the total sale was 130,000. What is the policy of receiving these monies? Remember, these are cash budget. I'm interested in when is this cash coming to hit my account? So what they've told us as a rule here, they've told us as a rule here is that 40% are cash sales received in the very month. So 40% of 130,000 sales we did in February will be received in February. So can somebody then give me what is this 40% of 130,000? 130,000 times 0.4. Please talk to me. 130,000 times 0.4. How much am I getting there? 130,000 times 0.4. Charity gives me a figure of 52,000. So the 52,000 is cash. I'm receiving it in the month of February. And then we have, ladies and gentlemen, 60% of 130, 60% of 130,000. Can somebody give me that amount? 60% of 130,000. Alan gives me a figure of 78,000. When am I going to receive this 78,000? Can somebody talk to me? When do I expect to receive this 78,000? When do I expect to receive this 78,000? Remember, it is 2 months after. It is 2 months after. 2 months after the sale. So because it's a sale that was done in the month of February, the 2 months will be in the month of what, yes, somebody? April. And you can see April is beyond me. April is beyond my budgetary period. So I'm not concerned with that. So the same case with March. With March, I can only recognize the cash that I'll be receiving in the month of March alone, which is the cash of 40%. So when I come here to the month of March, what have they told me in the month of March, ladies and gentlemen? What have they told me in the month of March? That March, the total sales was 140,000. So in March, the total sales was 140,000. I'm only going to receive 40% in this particular period. 60% will be received in future, which is outside this budgetary period. So 140,000 times 0.4. Do we have a great ninja or ninja ray who can easily give me this figure for the month of March? So in this case here, 40% of 140,000 will give me 56,000, like that. Thank you so much. Thank you so much. Thank you so much. So you can easily go ahead and give me the total receipts, because in this question, we only had receipts from sales. So total receipts for each of those 3 months. For each of those 3 months, I can see this will be 80 something. No, 90 something. But I will expect a figure from you. I would expect a figure from you. You're adding the two. So then as a management accountant, you know that this particular year or this particular month, you expect cash over how much? Remember, in a business, cash is king. I shall never play with cash. Yeah. Is there somebody who is able to see 92,000? 92,000. This will be 112, I think. 112,000. And this will be 100. And if I'm not wrong, yeah, 00012. This is 11. So 122,000. So those are the cash receipts like that. And then now we go to the payments. Let's go to the payments. Let's go to the payments section. Let's go to the payments section. So payment section, ladies and gentlemen, what do we have over there as payment section? So remember, we have a question that is guiding us. We have a question that is guiding us. We have a question that is guiding us. Yeah, so the payments are given here very, very well. The payments are given here very well. So we have purchases, we have to pay for our purchases, wages, and then we have overheads. We have overheads. So we start with the purchases. So purchases, they are paid in the month following the month of purchase. So when we purchase like this, next month we have to pay for them. So, and you can see our purchases figures. We can write them in our workings somewhere. in our working somewhere. So you can see our purchases from the month of November last year, December last year, January this year now, February, March. So I can see purchases. So I can see purchases. So like now, November, the purchases there were 40,000, 40,000. December, they were 60,000. December, they were 60,000. We have here 80,000. February, they were 90,000, 90,000. And this was quite a straightforward question. Now, from there, let's pay. Let's pay them. So what have they told us about payment? Payment, they have told us we stagger them and they pay for them 1 month in arrears. So meaning that the November purchases will be paid for in which month? This 40,000, you're going to pay for it which month? You can just type there very fast because it's 1 month. The payment policy is 1 month. Yeah, December. Thank you so much, Brenda. Yeah. So in this case here, November purchases, this one we shall pay them here. Yeah. December, we pay them here. January, we pay them here. February, we pay them here. And then, of course, March, we shall pay them in the period coming after the, but so I'm not interested with that. So remember, I'm interested in the payment for these 3 months only. So we have here purchases 1 month after. And already I have the figures. I've been able to stagger this. So we have 60,000, we have 80,000, we have 90,000, like that. Yeah. Yeah. So up to there, ladies and gentlemen, somehow are we really together? Somehow are we really together? Up to there, somehow are we really together? Talk to me. Yeah, thank you so much. Thank you so much. It's very, very easy, really. Very easy. From there, ladies and gentlemen, let's look at the other payment, which is what here? Wages. So what have they told me about wages? Because I need a policy for paying. You know, they are bad employers. They are those employers that you work for, you earn your wages of, say, Kenya shillings 10,000, but they cannot pay you in the month. There are those employers who are not like RCM. RCM, I will always make sure, so long as I'm alive and I'm the principal of RCM, I'll always make sure I pay my employees by the very latest 23rd within the month. Yeah, 23rd. I strive to pay like the UN. Yeah, like that. Yeah, because once you start delaying workers so much, then automatically they'll not be partners in your business. But they're bad employers. Like I believe the employer here is really an employer. Let me see whether it's an employer from, yeah, he's not a very bad employer, but I mean, why should you pay these wages in portions? So you can see what they're saying here, wages, 75% in the current period, 25% in the following month. Yeah, so then I will go to my working section. I need a working section always. Always, I need a working section. I must have a working section. I know you guys have a working section. So then I'll be able to write the wages here very well. So we have wages for November last year, 10,000. 10,000. December wages, I can see 12,000. 12,000. Then we have January, February, and then we have March, like that. All right. So we have 12,000 here in terms of wages, 16,000, 16,000, 16,000. Then we have February, 20,000, and 24,000. And 24,000. So they've told me that 75% is within the month. 75% is cash. And then 25% is credit for next month. We pay next month. We pay next month. Then I will start doing my postings. I will start doing my postings very easy. in my workings, remember, this is for workings generally. So remember, these are wages earned by my employees. I should be able to double underline them like that. So 75% of these 10,000 will be paid in the month of November. It's cash within the month. So then 75% of this 10,000, of course, that is 7,500. But 25% of this 10,000 will be paid following month. Following month. Are you able to give me the 25% of this 10,000, the one that is double underlined? It is 2,500. I finish with November. So I'm now through with this November figure. I go to December figure, do the same distribution. So 12,000, 75% will be paid in the month of December. 75% will be paid in the month of December. 75% will be paid in the month of December. In the month of December. So I'm still waiting to hear from you. In my workings, I know you guys have workings maybe by the side there. So I want you to give me 75% of this 12,000. I book it in the month of December. I want to book it in the month of December. So according to Brenda Chichi, it is 9,000. So 9,000 of the 12,000 will be paid in December, but the other staggered amount of 25% will be pushed and paid for in January. So then what is 25% of this 12,000? Must be 3,000. It must be 3,000. And this is coming on the credit. It's coming on the credit section, not cash section. So 3,000 the following month. The following month is January, like that. So you just move slowly. Go to the next one, ladies and gentlemen, which is January wages of 16,000. Pay 75% of this in January. Pay 75% of that in January. So 0.75 times 16,000, what figure do I have? 0.75 times 16,000, what figure do I have there? 0.75 times 16,000. So in this case here, that amount will be paid in January. And then the balance, which is 25% of 16,000, or even you can take 16,000 minus 12,000. The balance is 4,000. That one will be paid in the following month. So this is 4,000 like that. 4,000 like that. All right. And then, of course, we have, ladies and gentlemen, now the month of February, where we have 20,000, 75% of 20,000 is how much? 75% of 20,000 is how much? It's 15,000, I'm told. And then now the balance, which is 25% of that 20,000, which is 5,000, will be paid on credit here. Yeah. And then you guys, as you finish, what is 75% of 24,000? 75% of 24,000. 75% of 24,000. Can somebody help me? 75% of 24,000. Can somebody give me a figure there? I'm being told it is 18,000. So then 18,000 will be paid here. The balance will be paid in the month of April, which is non-issue to me. I don't want month of April here. So they come here and they give us wages, the ones in this case here that are paid cash, and the wages in this case are the ones that were paid on credit basis for the 3 months alone. For January, the payment is what I'm concerned with. So January, I have 12,000 here. January, I have 3,000 there after I've done my working. Then February, I have 15,000 and 4,000. 15,000 and 4,000. Then, ladies and gentlemen, we have March. So March, we have 18,000, 18,000 and 5,000 like that. 18,000 and 5,000 like that. So basically, that is what we shall do and finish the entire thing. So I'm still on the payments. I've been able to do the purchases. Yeah, I've been able to do the wages, both of them, cash and the credit. So at first it looks quite elusive. You may think it's quite tough, but trust you me, this is really a walk in the park, a leisure walk in the park. You know, globally, there is nothing as easy as just walking there. Yeah, while you are trying to look for those big 5 animals. Yeah, Very easy. Very easy. So from there now we have the last one, the overheads like rent. So the overheads like rent, what have they told us? Overheads. So overheads, they have told us these are paid in the month after they are incurred. How do you interpret this, my good students? Do we pay for these? Do we pay for these? Yeah, on the same month or the following month, the way you are able to interpret this? The way you are able to interpret this? Please talk to me. Take your time and try to understand these overheads. They are paid in the month after they are incurred. So do we pay them this month according to understanding, or do we pay them in the following month? I would want to hear from you, my sons and daughters. My sons and daughters, I would want to hear from you. Do we pay for this in the month, in the very month they are incurred, or do we postpone them to next month? Please talk to me. I cannot hear you at all. What is your opinion here? What is your opinion here? So are you saying that, for example, January, we pay for January in February? All of them are saying following month, including the lion. I love students like these guys who are really not fearing anything. Yeah, we get to discuss. We get to discuss. So I'm giving you a few minutes to think about that. I'm giving you a few minutes to think about that. They are paid in the month after they are incurred. No worry. I want a consensus. A month after, for January paid in February, the next month you write. You're very right. Thank you so much. 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 You see here, and this confuses, paid in the month after they are incurred. So then that means that we are being given a credit policy. We're being given a 30 days credit or a whole month credit. So it means that, for example, if you bought this or you're paying rent, yeah, top of buying, if I'm buying these things on the 5th, I'm given 30 days. So automatically that payment will spill over to next month. Paid in the month after they are incurred. So then can you kindly give me these overheads and tell me how much then will be paid in January, February, and March? So these are the overheads. So I'm able to do my working up there as usual. So we write our working up here. It's always important for you to have that working. Always, we shall write our working. So we have here November, December, January, February, then we have March, like that. Right? So we have, ladies and gentlemen, our overheads. We have our overheads. So overheads, we have here 10,000. December, we have 10,000 again. Then we have 15,000. Yeah. February, 15,000. But now remember, this overheads in accounting these respective months, but when it comes to paying them, which is the main concept of a cash budget, when it comes to paying them, the November amount in the card in November will be paid in December, So it means that this 10,000 here will be paid here. This one will be paid there. So this amount will be paid next month. This amount will be paid next month. The other one will be paid in the subsequent month, which is beyond our credit or our budget period. So I'm only concerned with the payments over these 3 months only. So then we have here overheads. One month after. So already we have the figures. We don't again try to play some picky ponky game here. So then please give me the total payments. Give me the total payments. Total payments from here. So give me the total payments from there, and then I tell you what we shall do. Total payments. So 60,000 plus. So Alano Mondi tells me that January is 85,000. January is 85,000. Thank you so much. February. Alana Ninja could be doing much. February. So February, we have 114,000. February, we have 114,000. Thanks, Charity. Thanks, Alan. And then March, what do we have in the month of March? So please give me the surplus or deficit. The cash surplus or deficit. You take the receipts minus the payment for each month. Thanks, Brenda. Thanks, Charity. Great. So like in the first month, the total receipt is 92,000 minus 85,000. So according to Alan, we are getting 7,000 positive surplus. Thank you so much. And then the second one, I can even see it on my own, 112 minus 114. That gives me minus 2,000 deficit, like that. And then the month of March, how much do we have there? 122,000 minus 128,000. That gives me minus 6,000. Minus 6,000. So come and give me the opening balance. Give me the opening balance. So is the opening balance given really? Oh, yes, it is given. The opening balance is given. So the opening balance that is given, the opening balance which is given down here, yeah, at the start of January 2022, opening balance was 15,000. So opening balance, 15,000. So then give me the closing balance. So closing balance, what do we have? 7,000 plus 15,000. What do you think will be the opening balance of February? What do you think will be the opening balance of February? What do you think will be the opening balance of February? Thank you so much. It will be the closing balance of January. So you bring 1,000 here. Add this to this, you have 20,000. Yeah, 20,000. And this 20,000 is now what you bring there. 20,000. So that now the closing balance for the month of March will be 14,000. And as a management accountant now, I'll be very, very worried here. Why am I worried? Because I can see my closing balance is diminishing. And remember, always in business, cash is king. In business, never be cheated. The moment you run out of cash, it doesn't matter how much acres of land you have, you will still be auctioned. You will still be auctioned. So then that marks the end of this particular what year concept of cash budget. And I would want you immediately, you get to do this question for me. Yeah, April 2024, question number 5. April 2024. April 2024. April 2024, question number 5, where B, they asked us to distinguish between fixed budget and a flexible budget, outline 3 benefits of budgetary control system. These we have done so well. So a flexible budget, remember, is a dynamic budget where we expect, ladies and gentlemen, yeah, the actual outputs to change. And because the actual output changes, it will be very important for us to come up with a dynamic budget which changes as the actual output, in this case here, changes. So it's a budget which recognizes different cost and revenues behavior, and therefore is designed to change depending on the level of activity actually attained. Yeah, benefits of budget controls, I'm so sure that is not a big deal. Now, where I would want you to put your heads together, by the way, are you watching this session? Are you following this session from school? Are you guys following this session from school, or are you in your respective homes? How I pray you are together, because I would want you to really get to discuss this. This must be discussed. This must be discussed. The following information relates to projected activities of Detrick Limited, a local manufacturing company for the year ended 2024. So you have January, February, etc. up to August. Additional information is where you can really dance at times. It is expected that the cash balance, this cash balance, I know where to use it. Wages are paid within the month, they are incurred, so cash. Creditors for raw materials are paid 3 months after receipt, very easy. Debtors are expected to pay 2 months after delivery, that already we have covered. Included in the overhead figure is 6,000 per month, which represents depreciation. What do you know about depreciation? Anybody who can make a comment about depreciation? What I know about depreciation is that it's a non-cash item. It can never appear anywhere in a cash budget. So then I must subtract these 6 million, yeah, from my overhead figures each month. So there is a 1 month delay in paying the overhead expenses after we removed this. Then in this case here, delay. Yeah, 20% of the monthly sales are on cash basis. Great. Then we have a commission. I would want to see how you'll handle this commission. 9, the company intends to repay a loan of 75 million on 31st May 2024. That's very easy. Go ahead and pay it. Yeah. So they want you to do a cash budget for the months of May, June, July. Only 3 months. Only 3 months. Only 3 months. And you can see straight out. It's a very small thing, but at times it can really, really mess up with you, especially if you're not the type of accountant who is able to reason on their feet. On their feet. So you're supposed to do that cash budget question in 20 minutes, and then you get to post this quiz answer on our group. On our group. Yeah, it's disallowable simply because depreciation, ladies and gentlemen, don't argue it in the context of tax, but for us, we shall disallow it because it is non-cash item. There is no cash that has gone away because of that depreciation. Because of that depreciation. All right, all right, all right, all right, all right. So thank you so much. And we really have come to the end of this session.